Housing feels stuck in limbo, too expensive for most buyers, yet no longer rewarding for sellers. The national housing market seems to have entered what experts call a nobody's market, where neither side comes out ahead. Prices are edging up, but at a sluggish pace that satisfies no one. According to real estate analytics firm Cotality, average U.S. home prices rose only 1.2% between September 2024 and September 2025, a slowdown from earlier this year. National brokerage Redfin places the gain higher, at 3.1%, while the Federal Housing Finance Agency, FHFA, reports a 3.26% increase between the third quarter of 2024 and the same period in 2025. The differences highlight how measurements vary depending on methodology, but the story is consistent: price growth is losing steam. The real shock, though, lies in affordability. The October ICE Mortgage Monitor reveals that in mid-September, with 30-year mortgage rates hovering around 6.26%, the average monthly principal and interest payment on a typical home required $2,148, roughly 30% of the median household income. Although this is slightly better than during the summer's peak rates, it still sits about 5.4 percentage points above the long-term average. For many first-time buyers, that small margin makes the difference between owning and staying on the sidelines. Adding to the imbalance is what economists are calling a K-shaped housing market, where higher-end properties thrive while affordable ones stagnate. Realtor.com reports that through the first 7 months of 2025, sales of homes priced above $750,000 rose 5.8% year-over-year. In contrast, sales for homes under $750,000 fell 3%. In simple terms, luxury homes are propelling most of the market's momentum while the more attainable segments keep shrinking. But here's where it gets controversial: is this divergence a sign of economic health at the top, or proof that the middle-class dream of homeownership is fading away? On the seller side, frustration is brewing. Many homeowners sense they may have missed the market's recent peak. Although agents repeatedly advise that moves should align with life circumstances rather than timing the market, it's hard to ignore the sting of knowing neighbors once sold for jaw-dropping premiums. There's a backlog of sellers remembering when homes sold 10 or even 20% over asking within a weekend, said Maura Neal of RE/MAX around Atlanta. They still want that magic back, but we're unlikely to see it again. Redfin's latest figures echo that sentiment. The share of homes pulled off the market in September hit a historic high. Many listings sat unsold for too long, forcing owners to either withdraw or stay put rather than accept lowball offers. The result? A market where neither party holds the upper hand. One agent summed it up bluntly to USA Today: "It's not a buyer's market or a seller's market, it's nobody's market." Do you think the housing market has finally reached equilibrium, or is this just the calm before another major shift? Would you rather buy now despite high borrowing costs, or wait and risk prices climbing again? Let's hear where you stand.